Hello everyone, this is Shane with Trade ATS. Before we get started, I just want to do our quick little sound check and make sure everyone can hear me all right. If you can hear me, go ahead and type a Y into the chat. Beautiful. All right, so anyways, I'd like to welcome everyone to this week's webinar. We're going to be going over some pairs and also touching on the volatility report that some of you might have seen got sent out yesterday. So anyways, with that, I'm going to go ahead and hand it over to Wade and he'll take us throughout the rest of the webinar.
All right, thank you, Shane. I want to welcome everyone to this week's webinar. As Shane had mentioned, we did send out an email last night introducing everyone to the volatility report. So hopefully you guys saw that. It's just a new little feature, report that we're putting out, and we're looking for basically pairs that are fresh into expansion, with the idea that if they're going into expansion, that's the closest part to them starting to trend, and there's going to be some good movement. So I want to go over kind of a little bit more about that, because on this webinar, obviously we only have subscribers. You guys are using ATS software, but the volatility report is something that we put out just for our general email list. So I want to make sure that you guys as subscribers really know how to use it, because people will get it from the general list, but they're obviously not going to have the software to be able to explore other pairs and do all that. So, but I want to make sure that you guys know how to use the tool and what it means, because you guys are definitely our priority. We want to make sure that you guys are getting the benefit from whatever we put out and making the most of your subscription to ATS. So let me see right here. Hang on real quick. Let me get my screen up and go in here. Okay, just want to make sure, can you guys let me know that you can see my screen and that everything's good to go? You can just type a Y. All right, perfect. Okay, so looks like we're good to go. So what I wanted to tell you guys about the volatility report is I just wanted to kind of go over the components, and I also wanted to, the biggest thing I wanted to do, I think you guys have been through our trainings and been through the quick start course that gets you started with the ATS program. You guys have already been through a lot of this stuff, so you know a lot about what we're talking about when we're looking for the expansions. But if you guys notice, if you did sign up for it, you notice that there's another component, another course component to the volatility report. So what I want to do is I want to quickly go through that and make sure that you guys understand what that is, so you're not confused and all that. Because like I said, we want to keep you guys focused on what you guys need to do to utilize the software and drill down on the methodology, and definitely don't want to cause any confusion on that. So I'm going to switch over here to this is the new Trade ATS Fundamentals course, and what this is basically it's a course that we put together to basically educate people on our general methodology. You'll notice that the main videos we have, these are the ones we have for free on YouTube. They're I'm sure you guys have seen these videos, or at least one of them. They're also in the quick start course as well. So anyway, we put those in there just in case someone hadn't seen those videos. But the one thing that you guys want, this is all stuff that's going to be very familiar to you guys. Right here, it talks about ATS software. If someone's interested, they want to learn about how it works, we put those videos in there. Again, these videos you guys have already seen, and these videos you guys have already seen as subscribers. The one that you guys haven't seen yet that you may want to check out is how to maximize our volatility report right here, this video. This is one that is not in the original course so when you guys sign up for the software. And in this video, it just it goes in depth about how to use a report. And you may definitely, like I said, it's kind of a recooked version of all the stuff you guys have been learning in the course, but there may be some nuggets in there that you guys can pull out too, that may be some aha moments that that you haven't got so far. So anyway, that's the one video I just want to tell you guys. If you're going to go into that, again, it's a rehash of all the stuff that you guys already know, already have watched, except this video that's more specific to the volatility report. So something that you guys definitely would want to check out when you get a chance. And when you guys do sign up, we are driving people through the funnel where you do have to put your email again in again. And the reason we're doing that to sign up for the volatility report, even if you're a subscriber, is that on our end, it allows us to segregate lists. So that way we know when someone has opted into the volatility report, we know that we can send them specific information just to that list. So one of the questions we got is, through support is, well, you know, I'm signed up. Do I have to re-sign up or put my name and email in to get that? And the answer is yes. For right now, and that what that does, it identifies that you want to get that report. And then again, like I said, we can on our end, we can then segregate information that's specific to the people that have opted into that report, which just makes things easier to sort on our end and make sure that we can, you know, get the information to go where it needs to go. So anyway, you could go through that through the email that we sent, and there will be the volatility report. This is going to be something. This is a very first rendition of it. We have a lot of ideas with this to make it better over time, including doing some video commentary on the page. So we really want to make this a really good service to give not only to you guys, but to give to the Forex community in general, or the trading community in general. So anyway, this will be an evolving process. So definitely we're excited to get it out there and start working with it. So going over the actual signals, again, if you guys watch that video in the online course, you guys will be able to watch that video, and it'll tell you everything that you need to know about this. But I'm going to quickly go over the actual signals, and we're going to look at them on the charts, and we're going to talk about them for you guys exclusively, just so we can kind of drill down on this, okay? So the first signal we had was euro pound, okay? Right here it says the long short threshold price. What is that? That's going to be the expansion line right here coming out of the box. We took a screenshot at the time of doing the report. So that's going to be the expansion line, the general price level of that. The directional bias, this is going to be the overall direction that we think it's going to break. If there is, you know, if it's at that stage yet. Right now it says wait for reaction to the threshold price. So wait till we get a reaction off the white line, or if it holds below or holds below or holds above. So we're trying to, there's still some time to wait on this signal. And then we have some commentary. Euro pound has left its contraction on the weekly time frame. The last contraction on this time frame was March 2019. This move short simultaneously took out two major liquidity lines and also went into contraction, gathering the orders, setting below the past prominent low. Until the reaction to the threshold price is clear, there's no clear direction. Once that happens, be on the lookout for a very large push. And so what we're talking about is that how it came down and absorbed. You can see these candles came and absorbed those expansion levels right there. I mean, the liquidity lines right there, and then we went into contraction. What that tells us is that this box has a potential. It's probably loaded. So when we break, like we are right now, there's a potential for a big expansion. And then also too, this market in general is flowing. There's a lot of movement in euro pound on the weekly time frame, as you can see from the previous expansion. So we're hoping that it'll still follow that suit. So I'm going to look at that. Another thing I want to mention real quick, which again, that video goes over, is that we do have a button right here that says go to live chart. And what that does, it just takes you to a chart on tradingview.com, which is just a euro pound chart. So for people that just want a quick look at the euro pound, it's just a little feature we added to that. So, but again, of course, you guys are going to be probably going and looking at this on your ATS charts on MT4. So at least that's what we would hope you'd be doing. So anyway, euro pound, let's take a look at those charts real quick, and we're going to go into that a little bit further here. Switch over my screen. Okay, so here's euro pound. Hopefully it should be showing for you guys. And then this is a signal again. This is a weekly chart. So one thing I want to talk to you guys about is that on the volatility report, we're going to have, what we're looking for is we're looking for setups that are mostly on the 4-hour, the daily, and the weekly time frames. The highest benefit one, I think, depending on what time frames you guys are trading, would be the daily time frame. Basically getting early expansions on the daily, because what that essentially means, excuse me, what that essentially means is that if we're going into expansion on the daily time frame, that means the daily is getting ready to go into a whip. You know, it's getting ready to have some volume come in on that time frame. And if the daily chart starts moving significantly, what that means is that your 4-hour and your 1-hour and your 15 and your 5-minute time frames are going to have big moves that are going to be more easily tradable in that trending daily time frame. So I think that, you know, the dailies are going to be kind of the prime ones that we're after. However, we've been scouting this out for, you know, 2, 3, almost 4 weeks now, trying to figure out how we're going to put the report together and what time frames. And the daily doesn't, there are some weeks that the dailies are just, they've already expanded, and there's just not a lot of signals content wise for the report. So that's why we're going to go, because there's also some good signals on the 4-hour as well. If the 4-hour breaks, then you're going to get some good movement usually in the following, you know, 1 or 2 or 3 days. On the 4-hour, possibly the whole week it could lead into. So the 4-hour is a good volatility signal. And then also the weekly as well. So this one in euro pound, for instance, this is a weekly volatility signal. We're fresh out of this box. You can see when this thing starts moving on the weekly and it's already started to really open up, you get really, you know, potentially big running weeks right here. I mean, we're holding under expansion 1 week, 2 weeks, 3 weeks, 4 weeks, 5, 6, 7, 8, 9, 10. You're talking about 10, 11 weeks that you held red under expansion. So you take the simplicity of that on the weekly time frame. You know, when you spot this kind of stuff and you stay consistent above or below expansion, same thing right here. You know, you get a lot of weeks where you only got to focus on one direction if you're using the weekly as your directional bias. And this is gonna be more helpful for my traders that are probably using the 1-hour or the 4-hour, depending on what you like better. But 1 hour into the weekly or 4-hour into the weekly, these are, you know, excellent signals. You know, just think the simplicity of that. You know, potentially, you know, you're working with a pair that on a regular basis gives 4, 5, 6 weeks, you know, in a row that stay the same color. You know, what's that say for your setups on the 1-hour time frame? You know, that's you know, it's a good environment to trade in. Where the markets get difficult is inside these boxes. And this is what we want to keep you guys out. And I know that, you know, the box, it has to go through the confirmation pattern for the box to actually appear according to the algorithm. So there may be situations where you guys are trying to trade it and next thing you know, okay, it's in a box. I know that does happen, but what we always tell you is that, you know, you need to expect the farther you deviate away from the last average price and it's shown that it's trended, you have to start scaling back. You don't want to get too heavy on your trades because you could trade yourself right into a box and take some unnecessary losses. So you got to I'm not saying don't trade it all the way, but be mindful. Eventually, you're going to go back into the contraction phase, and it's going to be whippy and it's going to change direction on you a lot. What we're trying to do with the report is just attack the trend right here, fresh out of the box. You can see how this is in the sweet spot. So if you're trading on the 1-hour, 4-hour time frame, right here, this is you want to go to work at this point. Because why? Because this has the potential to turn into this. You know, this is where you start going heavy, and then as it comes out, you take out liquidity lines or you get some indication that okay, the trend is spent, it's over. That's when you start scaling back. So we're really trying to capture and get people used to getting prepared in this situation rather than watching something go by and then getting all crazy down here and then getting beat up into this. We're trying to time the volatility of the market and get you guys getting more aggressive at that key time. So that's a signal right here on the euro pound, like the commentary said. Right now we did break out low, but we're looking to see if it's going to hold above or below. Right now, you know, that's kind of what determines the direction. There's not a whole lot that we think looks great on the higher time frames, like the monthly time frame. So it really is going to depend on where we settle on this average price. But just know that because we broke the low of this box, that's proof of volatility. And I guarantee you that this market is going to travel at least the size of this box, at least, which is 1,558 points out of there. So that's a guarantee. It never didn't go at least as far as the box. See right here, the box, it'll traverse the box and deviate away from the box. It'll always will end up going that far. So anyway, it's proof of volatility. We know the bigger players are entering the market. We're trying to capture that exact moment. So that's a euro pound. Let me go over, and I will let you guys know too that I will take a look. I'm going to go over the signals on the volatility report, but if you guys do have some questions or want me to look at a couple other markets, I'll do that as well as soon as I'm done with these. So anyway, just want to put that out there. You guys can start typing in those questions and those markets too. Okay, so let me get this back here and let me check the other signal here. Was going to be okay, it's the pound franc on the weekly chart. So let me switch back my window here so we could read through it together. Okay, so the second signal right here is pound franc. We're going to go through the long short threshold price, 1.2645, which is going to be the price of the expansion level right here. Directional bias is short based on previous expansion line rotation, contingent on getting below threshold price. So we think there's a good probability that we're going to end up below this expansion. Why that is because you can see that we had a reaction off of this previous expansion here at the top, right here. So that's a clue kind of putting together the overall architecture. Pound franc is very similar to euro pound in that we're still waiting for reaction to the threshold price, aka the expansion line, which will ultimately tell us the bias. But based off the rotation back short at the previous expansion line above, our probability is higher on the short side at the moment. So again, what I'm saying is based on this clue, obviously we can't tell the future, but based on that clue, we would expect, we would not be surprised if we don't get below average price on this signal and then work our way down toward this previous average price down here. So I'm going to pull my charts up. Okay, hang on real quick. Here we are. So let's see, let's take a look at what it did today here so far. Okay, so at the time of the report, which was yesterday, we were obviously down closer into this box. We put it together late yesterday afternoon. So now we're starting to go above. So what you'd be looking at in this situation, remember, it definitely looks like, this is a clue that we could be headed down and testing at least this level right here and working kind of this overall downtrend. However, we are getting a reaction now. The market's going to do what it's going to do, and we're starting to head long. In this situation, if you get this reaction off of that average price right there, and then this turns this candle long, or it starts to go green, that's the scenario of the price settling. It's starting to reject that average price, and in that case, if you start to pick up on that clue, I would probably start getting more aggressive to the long side. With using the weak as your directional bias, because again, that's gonna, this is a clue overall, but this is gonna be more important in the moment is what we're gonna do with this level. So we're still at that rocking point, but just know we broke the high of the box. That's that proof of volatility. This thing's got juice in it. It's gonna move. This is where it's gonna have the potential. You can see this market too has already shown the proof. It's flowing again. Last expansion out here, you can see we're putting in some pretty heavy trending weeks out of expansion. So we're expecting it's going to follow suit to some degree and give us some sort of good trending movement. And again, if it's going to happen on the weekly, I would looking at the daily charts, that's going to lead to big trending days, on the lower time frames. So you want to definitely keep your eye on this one. Let's take a look at the next signal here. Okay, the next one here is Aussie Yen. And this one's a daily signal, and you can see that we put a little snapshot of the weekly chart in here, because remember, again, this is going out to people that can't just pull up the software. We're trying to give them somewhat of a snapshot into what we're looking at and trying to help them out as much as possible. So right now, the threshold price, 73.82, which is going to be this line right here. Directional bias is clearly short, and that's based on the weekly. So you can see that the weekly we broke out, and the weekly is still close to expansion as well. So this is really hot right here. Broke out short, rejected average price. Now we're starting to rotate. This is starting to feel like, okay, we could definitely hold under average price here and start getting more aggressive to the short side. So this is, this one is starting to shape up, looking really good. We'll read the commentary real quick. We're currently under the threshold price for the daily and weekly timeframes, making short trades much higher probability. There's a reaction at a past weekly threshold line, but now that the breath is played out, the market is testing that level once more. This pair should be fairly active throughout the week. So anyway, this is definitely a hot market right here, Aussie yen. So that's one of your guys' pairs. Definitely would stick with that. This one, over the next, I would say, month to 2 months, should probably show some pretty good movement. So let's take a look at this on the chart and see what's played out since yesterday. Okay, there you go. So your weekly is short, like we showed in there. We'll take a look at the daily, because the main signal was on the daily. But you guys could see the combination. The story was a combination between the daily and the weekly, but you could see how they were both close to expansion. But there it is, playing out to the short side. That's a volatility coming into the market. There's your classic entry on the 1 hour. If you're trading the 1 hour into the daily, above average price, get in on the rotation. Your downside is up here. Come down through, came up, held under that average price. That was your target price, and now it's trending short. And anyway, these are the situations that we're looking for. And remember, if this is coming in, you have volatility coming in on the weekly time frame and the daily time frame. So there can be a lot more than just this in the tank. This is just getting started here. So anyway, again, like I said, this market looks really good. And what I want you guys to take away from that is switch this over to the daily here, is understanding the combination between the weekly here holding below average price and the daily expanding out shows that weekly candle is about to open up. You got all this volatility coming in. That's a situation right now is what you guys want to get. You want to get aggressive on, and hopefully some of you guys caught that. But when the report came out, you guys caught that move on the hour or coming into that. But that's the biggest thing with ATS is that some people, they'll get on and they look at the basic criteria. We say find a directional bias, and then based on your directional bias, if your directional bias is long, then you're buying under expansion on your shorter time frame. If it's short, then you're selling above expansion. And they look at literally just that one thing. They look at, okay, is this in that criteria, that basic criteria? But they're not really reading the market. They're looking for a mechanical set of basic rules that are always going to pay. And the thing they're missing is that you need to have positive expectancy with your approach. And timing is a big part of the market. This is the volatility report, and your guys, the expansion, which you guys see all the time, is a software. That is your aggressive indicator. That's where you want to get aggressive. You want to get, when you get out of expansion, especially when you get clues that hold above, you even want to get more aggressive in situations like this and then like this. But when you start taking out liquidity lines, you don't get aggressive up here. You were supposed to get aggressive down here. So a lot of people will not a lot of people, but we've had people that sign up They get in here and they just start looking for that mechanical criteria so they're not going to have to think about the market anymore. And they're not paying attention to timing. Aggressiveness starts close to expansion. It doesn't start when you've already deviated away. So anyway, and I know that
I
we're
actually, wait, I have a comment about that. I see a lot of times I get a screenshot sent over that, sometimes if it's somebody newer and it's, that a lot of them will be somewhat basic questions, but I see a lot where someone's like, what am I doing wrong? I'm not, this trade is going against me. I get in, it's above, if they're trying to look for a short trade as an example, it's above expansion on my entry time frame, and it's clearly under expansion on my direction time frame, but it's been like 25 candles outside of the box where it's been an expansion for a long time, and they're ripping like the tail end of the move, and it's like gotta get a little bit earlier into the party. We're looking for something similarly. You'll notice this is the only one that was real clear that we said directional buy short on the volatility report, because it was, we had a few candles out of the box. It, tested an expansion line, was still coming back towards it. It always takes a breath when it hits a big expansion line. And then it was testing it again. So it kind of had a little bit of extra signs showing us what the direction was going to be. The other ones just broke out of the box, which is why, there's going to be movement, but it's not as clear. But either way, this one has got enough maturity to where that it's kind of set up a little bit into what it's going to do, but it's not so far gone of all this movement happening that you're trying to rip the tail end of it, and you happen to get the absolute perfect entry to go the opposite direction than you're trying to go. So anyways, just a quick comment on what I'm seeing, some newer people might be struggling with. It's just ripping things when they're already, the move's already played out.
Yeah, that's the biggest thing. Like Shane said, you guys are some of you guys are really good at timing the market. It's when you get out of the box, you start getting aggressive, you start feeling out that market, you start coming up with scenarios, coming up with your trading ideas right here, what's going to happen, and then you're quick to find that move. You take your meat out of it, and then you're like, all right, thank you. Wait for the next one. That's you guys do really good at that. But then some people come in and they'll see a situation like this. We had the breakout, they'll watch this go by, and then right about here, they're like, okay, it's definitely long. I think it's long now. And then they're like, oh, this doesn't work. It's about timing the market. There's lessons in the online course that talks about timing volatility. It's one of the basic things, and that's going to add to your positive expectancy of the overall strategy. Is understanding. Everybody knows all trends are going to eventually end. If you guys have been trading for any amount of time, everybody knows it's a basic fact that nothing's going to just keep going on forever and ever and ever and ever. I mean, unless it's Amazon. No, I'm just kidding. Even Amazon takes breaths, So that you guys, you have a tool in front of you that shows you timing and gives you a very definitive price right here. Your expansion. I mean, this is the closest you're going to get to buying and selling zones and that tipping point. Use it. Use it. It's that you want to trade close to that situation. And I know that the markets do go sideways sometimes. So if you do get in a situation where it just goes and starts whipping, it fully traverses the box back, then it comes back and you're like, okay, it's dirty. Then you know what? That's another reason to just scale back. Wait for a whole new box. Wait for a new cycle. Just wait. Right now, it's over. As long as you stay, you time your aggressiveness and your approach to the market close to the expansion, you're going to nail situations like this. And if they don't start working out, then start scaling back a little bit. That's just how it has to go. But anyway, you guys could see how this played out. And this was, like I said, this was definitely our favorite signal from last night. And I would continue to watch this one. I think this is going to be an excellent pair, probably through. This is kind of a mix between the weekly. This very well may take a breath and come back up and test this, but overall, this one looks like it's going to be pretty good for the next, I would say 2 to 4 weeks conservatively. that I would keep this one on your radar. Okay, so that covers those. Let me go. I'm going to take a few minutes and read some questions here. So hang on real quick. Shane, if you want to talk about anything that I didn't cover, feel free to do that now. I'm just going to catch up on some questions and we'll keep going here. Hang on real quick.
Yeah, I wanted to point out just real quick that there's a few comments about gold and kind of what's going on. We're looking at putting gold because it's pretty, for those of you watching it, there's a lot going on in gold right now. I mean, you put on a 5-minute chart and it's like every candle is just moving. It's really, really volatile at the moment. Um, the volatility report was more aimed at things that were going to be, how should I say it, a little bit simpler to read and things that were fresh out of the box. Gold, while it is moving like crazy, it's also pretty far gone. It's a little bit hard, and this is a difficult area to trade just because we have so few lines around there. You know, it hasn't been up in this area a whole lot, so there's hardly any liquidity lines to work with. There's not a lot of expansion lines. Well, up until very recently when it started going into a little bit more of a range right here. But anyways, there's a lot of movement, but this is kind of tough trading. So, you know, we don't feel like we could, or we didn't feel like we could in good conscience go out and get everyone hyped up on trading it when it's, you know, movement, but pretty difficult, all things taken into account.
So yeah, just to touch on gold, like what Shane's saying, gold is by far an excellent performing market right now. But you guys see, according to what we're doing, again, gold, where's your volatility signal? Well, you got new expansion down here. It rejected expansion. Okay, time to start getting aggressive. Boom, boom, boom. I mean, this one is pretty extraordinary, obviously, but again, the move started down here. It's not starting up here. So while everybody's talking about gold and all hyped up on it, you know what? It's going to go back into a box because you're going to have a bunch of willing buyers and sellers come into this market and it's going to start going sideways. It's already, you know, again, I can't tell the future. All we can do is we can react to what happens and try to react quickly and make good decisions. But from what we know, you know, this thing it's pretty far gone, especially compared to, you know, recent moves. This was a good move right here. You know, this is, you know, it's big. It was a big move. So there's a good chance, you know, we could be headed back to another situation like this. Take another breath. And in that case, you know, right now the money's it's already been exchanged on this pair or on gold right now. It's already happened. If you got some out of that, beautiful. If you're doing the basic strategy, you know, you're above expansion. You know, on the 4 hour. I know a lot of guys trade in the 4 hour and the 15 or 4 hour and the 5 minute, or the 5 and the 4. And if you're doing that, you know, you could see your runs. Here they are. They're above expansion. You know, that's how it goes. You're only long, obviously. But right now, you know, if you're looking for trades, this thing's whipping back and forth, and that's what Shane's saying. It's getting difficult because you're real far away from any points that you can manage the situation. And you know, right now, I mean, we would be looking for this. We're above expansion. We'd be looking for this to go green, but just the way it's behaving overall on the 5 minute and everything, it just reeks of contraction. You know, this thing, there's a good likelihood it's going to go into contraction. It may dive down more, but anyway, point is down here. Get excited down here. That's what the volatility report's all about. That's what, you know, ATS assistant, you set the box expansion, the dot expansion signals. You're going to get that right away. You can set it to the 4 hour, you can set it to the daily, you can set it to the weekly. And that way, you know, the markets come across your screen that, you know, okay, I need to get aggressive on these, you know, because it's the higher time frame is starting to, you got proof of volatility. You knew that down here. And then right there, you make as many good trades out of that as you can. And then you let everybody else get FOMO and jump in, and now you go do something else. That's the whole point of trading the 3 market phases. It's timing as much as anything else. So, okay, so I'm going to keep going through some questions here. Hang on one sec. Okay, Ronald, I see your comment here. Trade gold on the 5 into the 30. Okay, cool. I used to trade the 5 into 30 long. This is probably like 8-9 years ago. I like that pairing. One thing I'll recommend with our, if you look at the 5 and the 30, and especially if you spend a lot of time with it, then you'll probably, you are very familiar with how those two time frames work together, and you can read them. However, for what we're looking for, the basics of what we do here, we're looking for the supporting time frame to give stability to a directional bias, because at the end of the day, the directional bias is what keeps us in line with the trend, and so we can marry one side of the market. That way, there's not one moment where you're long and then the next moment you're short. And so what ends up happening when you get your supporting time frames together too closely, then you end up changing your opinion on the overall direction. Now, if you're trading the 5 into the 30, that's fine if you want to pair those two timeframes together from a momentum standpoint. When you take a trade on the 5, you can look for the 30 to come around, but the 30 is rarely going to be is not going to hold the direction that well when you're looking for the much bigger setups. So I'd recommend using the 5 and the 30 if you want, but back it up with a 4-hour, and then only only setups that are in direction with the 4-hour. Meaning if you're above last expansion on the 4-hour, like we were here, you'd be staying away from these red candles and you're trading within these green 4-hour candles. Especially if you're trading a 5 or a 15 minute, this goes for everybody on here. If you're trading those lower of a time frames, you got to think that between the sessions, the highest volume times of these markets, at most you're going to get 8, maybe 12 hours. So you're talking about 2, 3, 4-hour candles all day that are going to be meaningful, right? Whereas if you're looking at a 30-minute or an hour, you can get several reversals. You can get the hour that turns against you, twice, maybe 3 times in a session. Whereas a 4-hour, if the 4-hour turns a color, or creates, a doji candle like this or shows indecision, that kind of spells, that spells what the deal is for the day, typically. Whereas if you know that the 4-hour has been, it's creating smooth movement, it's showing that's likely to continue through the session, it gives you a much clearer indicator, and it's not likely to reverse on you and throw you off the scent of the direction of the day. So I would personally, I would try looking at the 5 into the 4-hour and looking for setups that way. I think that would be a little more stable. And then I always tell people pay attention to the direction of the day as well. Just simply what color is the daily candle, because that's going to be a good indicator just to know where the predominant big moves are going to be. They're typically always going to happen in the color of that daily candle. Anyway, that's what I would definitely take a look at that. Okay, let me keep going through here. Hang on. Okay, a quick thing I wanted to mention too, in regards to the 5-minute and setups. The 5-minute setups are identical to the 15-minute setups, identical to the 1-hour setups. It all starts with forming your directional bias, understanding, having belief in that higher time frame, meaning that it feels good. Again, we felt good about this down here. Right now, we don't feel good. I wouldn't jump in long on this. If you weren't looking at any other chart, you'd be dumb to say, okay, I'm going to buy now. That's a terrible trade. So what you want to do is you want to start with that whatever higher time frame you use. Make sure that it's still close to expansion. Make sure it's still young in its cycle, and almost to the point where you feel like I'd like to just buy this market. I would just like to buy without looking for an entry on the lower time frame. When you feel that way about your higher time frame, that's when you go look at the lower time frame and try to find an entry. So whether you're trading the 5-minute or the 15-minute, it's the same thing. This was a long market. So going back, we'll take a look at this last big run up. basically as long as this direction holds and we're above expansion, we're seeing that momentum is confirmed, then every single time you deviate below average price is a setup. You could rip the turn. You're basically fishing for an entry, and we're trying to get back to average price. That's what ATS is doing. It's trying to put you in the money from below just to above, just to right here, and then we're trying to break through and see if it's going to run. Once it breaks through, that's where you're kind of in the, the profit phase, and you're going to see how long you can ride it and how it behaves. But that's the basics. You get below expansion, boom, you're going to break in the trending direction. So, but it's the same thing on the 5, same thing on the 15. You still need to control your risk, use good money management. Don't risk more than 1, maybe 2% of your account per trade. Those types of things, especially if you're far away from structure. If you've had a big move and you're far away from the previous base, then you want to do things that make sense. You don't want to rip a trade like this and then just let it run all the way against you back into the previous expansion level. You want to take the trade, but make sure that you're not risking more than what makes sense. So. But anyway, it's the same thing that we teach in the online course. It transcends time frames. It doesn't really matter what you decide to use on that. So, okay, I'm going to keep going on questions here. Hang on, guys.
I also wanted to add one thing about gold, because it's like, well, there wasn't much indication that it was going to turn, stuff like that. So when you get into an area like this, you kind of have to search a little bit for liquidity lines. It actually went up and took out a weekly liquidity line that was up there from the last time that it went and hit the high. So it hit that, and now we're going into a complete breath. So, again, there's just not, there probably are liquidity lines out there, but they're from like years ago. So the 5-minute data doesn't go back that far, or some of the smaller time frame data won't go back that far. But either way, there are liquidity lines there, and then hopefully you guys can see that it basically doesn't really matter how far back the liquidity lines go. They're still good, until they get taken out. They're still relevant price levels.
Yeah, that's a good clue. And that's you guys definitely want to if you're trading, I always recommend don't get too crazy trading more than like 1 to 3 pairs, because you really want to live through the cycles of those pairs. You don't want to constantly be chasing different markets, because just when one market has trended, then it's going to go into contraction, and you're going to get bored with it and say this market's not going anywhere. But the contraction phase, and especially the expansion, when you leave contraction, that's really where you want to start getting aggressive again. So you want to really live through the phases, so you're there. You'll be there for the sideways markets, but more importantly, you'll be there to pull the trigger when it starts getting interesting. So that's you really want to focus on those pairs, and you want to understand the time frames. You want to look at the weekly, you want to look at the monthly charts, even if you're not trading on those time frames, but you want to get a sense of where is the ocean flowing? Is it flowing north, or is it flowing south? You want to have that in the back of your head, so you really understand all facets time-wise of that pair that you're trading, or that whatever market you're trading. So like Shane said, if you were familiar with gold, you're looking at the monthly, you're looking at the weekly, these levels, we're coming up to sensitive levels here. And even though it's not represented on the 4-hour, you can see it on the weekly. So you're really getting a multifaceted approach. You're really understanding what the overall characteristics of that entire pair is. So anyway, good advice. Just be aware of all the time frames and spend a little bit of time with them. Here's a good question right here. Is it reasonable to use pending orders when you're trading higher time frames? Yeah, it's actually a great thing to use. If you're trading, let's say you're trading the 1-hour into the weekly. So, weekly, we started going long down here. We were confirmed above up here. So we've had a lot of weeks of buying opportunity. Let's see here. So we came down through here. Okay, so it started really getting going down through here. So when this weekly turned long right here, it started going up. then you could do that when you're looking for situations or you're looking to enter that weekly trend. Then you can set pending orders at different liquidity line levels. You can set them below expansion line levels. You know, in a situation where it's starting to take off, you may want to set a pending order here, maybe here. You know, as you're building a position in that weekly direction, you can definitely do that. And then just set your risk level to whatever makes sense for your equity management. You know, and then if you're there if you're around when it's an ideal entry and you see it better, then you could go a little bit heavier. It just depends on what makes sense in the situation. But yeah, using pending orders, just make sure that those pending orders have some sort of stop and limit to them, either based on structure of the chart, or if you don't have enough structure, based on some sound equity management, so you're not just letting something run forever against you in case there is a reversal. Yeah, it's definitely a good thing to do. So okay, let me keep reading here. See, a couple of you guys caught the Aussie yen trade. One guy, hopefully I'm pronouncing your name right. I think it's Baldiv. Got plus 58 pips. Awesome job. Congratulations. Okay, let me keep reading here. Okay, so here's the question. Which timeframes do we prefer to use here for our directional bias and lower time frame? It depends. You know, one of the problems, you know, time zones, whatever time zone you're in is actually a big advantage, and we're in California, which is not that great. So a lot of the trades that we take, there may be, you know, situations where we get up early if we feel like it's going to be a big volatility week and trade 5-15-minute charts. Every once in a while, maybe a 1-minute chart, 1 minute into the hour, if the spread conditions are right. But for the most part, it's going to be more long-term based trades, riding the weekly direction, weekly, monthly, using the 1 hour for entry. And the reason for that is because the London markets open, you know, around midnight our time is when these markets start usually moving. And if you want to have any kind of normal life, you know, we got kids and we got normal things going on, you know, and violin practices and, you know, all the stuff that goes along with that. And you can't really have any kind of normal life being up at midnight every day. It kind of defeats the purpose of trading. So in that situation, if you have a similar situation to that in the States, I know you guys towards the East Coast have a lot better time wise, but you know, trading the longer term directions, you know, or a combination of longer term and shorter term, usually is the best thing in the States. You know, but for us, you know, to be able to catch those moves, we really want to look for rotations on the weekly time frame, rotations on the daily time frame, and then find the best, you know, those grade A opportunity entries into those rotations. So, but that could cause trades to be kind of far and spread apart when you're doing that. But the good news is that when you're riding when you're riding the higher time frame directions in those situations, you know, that's where you just wake up. You know, if you got into this 1 hour trade right here, you have the weekly turn down here at let's see, it was week of 12/8. So here's 12/5, 12/12. So here's your rotation right here coming through here. So this is your potential to enter in this trade, especially as it starts showing aggressiveness. You're already green down here. You're attacking through the average price line. This kind of situation would be of interest to us to lock into this weekly move up. Now, we don't know this is going to happen, obviously, but we can see the rotation happening down here. We're going to try to find some sort of entry to stick, maybe get in on here, and then just try to find some sort of entry into the trade. But the trade starts over here on the weekly and on the monthly or the daily time frame. Just depends on what's setting up right. But that's really, when you're doing that and you don't have a lot of time, and this could be anywhere in the world if you just don't have a lot of time to babysit the screen, but if you pay attention to these big rotations and you find that first entry, like I said, the grade A type signal, like what we do on ATS Assistant, and then you work that type of opportunity, or it could be a grade B opportunity, but the timing is still good. That's why you got to still assess the overall situation. Could be a grade B opportunity that still looks very nice. In that situation, you want to work those opportunities, and then once you leg into that and you get in the money, then you've earned the right to ride it. And you can see, obviously, this thing, it really turned into a monster. So anyway, that's actually, this rotation was coming out of right here. I got the timing a little bit wrong on that. So yeah, this was, you were above average price, but this was up in here where you would have worked this opportunity. But anyway, the cool thing is when you're trading shorter time frames, in these, like this spike right here, this thing just went. This is very difficult to catch, and it's a lot of movement right here on that one candle. But you guys know, if you're trading shorter time frames, this is the kind of stuff that you kind of usually just watch go by. Now, if you're setting in a trade from down here, then you're not going to react that quickly. You're going to wake up and you're going to be up. You're going to catch that move, and probably this. Maybe you end up closing and you don't take the whole thing. But when you trade longer time frames, yeah, there's fewer and far trades, in between. There's not as much action, but you have a much better probability of actually getting the meat of these big moves. So there is a trade-off. So something to think about. But yeah, in California time, usually, we're going to gravitate more towards longer time frame things for the most part. But if the week is really moving, then there are some days we'll get in trade 5-minute, 15-minute in New York session. But we said mostly it's going to be longer time frame stuff just for consistency's sake. Okay, let me keep reading here. And we're going to probably wrap it up here in a few minutes. I like to try to keep these around an hour. So I'm going to try to look for a couple more comments here. And if I don't get to your guys' comments, feel free always, especially if you're new, submit your questions to support@tradeats.com. We're more than happy to help you out that way as well with whatever you guys need help with. So I'm going to look for a few more comments here, and then we'll probably wrap it up for the day. So hang on. I want to go back to a question here from JH. At least that's what we got the initials on here. It says, now I'm lost again. I thought that if the weekly is short, I'm looking to short from above the box back down to average price. So if on the daily price below the box and below expansion, I need to wait. Okay, so going back to, I think it was Aussie Yen was talking about, just to be clear on this, the volatility report is not an entry signal. It's not, so because the report comes out does not mean go pull the trigger. It does not mean that. So on the report, what we're saying is volatility is coming into the market. There's your rotation. We're fresh out of this box on the weekly. We're fresh out of this box on the daily. It doesn't mean just short the market. What it means is on the daily and weekly timeframes, the price is opening up. What it means is that there's now the potential for this to happen. Big moves, another expansion here, big moves. We know that the market is opening up. So what that means is that over the course of the next week, 2 weeks, 3 weeks, you're going to have situations like on the daily. Again, it was a signal on the daily for short. That tells you that the players are in the market. It's ready to move, but you're still looking for your entry. If there was any trade, it was right here. You're still waiting to pull above. You got a short daily right here. Here's your trade on the turn. There it is. You're still waiting for the entry. So I don't want you guys to confuse the volatility report for go trade and enter everything that's on the report and hope it works out. That is not what that's for. What it's for is to let you know that money's in the market, it's ready to move, and we have some reference points that we can work with to come up with a strategy for, because it's the same thing with like penny stocks. For the most part, penny stocks don't move. They're flat. The only way they move is when the promoters with the gigantic email lists, or however they're going to promote it, they promote it. And they say, you know, buy this company. They have groundbreaking technology. What happens at that point? Well, everybody starts, they want to come play at that party. You know, everyone wants to come to the party because it's getting attention, right? Otherwise, no one wants to, and no one even probably knew about the penny stock. So what this does, this is the equivalent to the promotion right here. When you break outside of that box, this is now being promoted. And now it has a potential for big moves. You don't want to trade things that aren't promoted, because there's a good chance that all the trades are going to not, you know, or a good portion of them are going to go sideways. What looks like a good entry falls apart. When you get a situation like this, a fresh expansion on the daily time frame, that when you're swinging on the daily, you got the whip. You can see we got the whip now. When you get the whip, then you have potential for this. And that's what we're saying. That's what the volatility report is. It doesn't mean just jump into the market. It means that still do the analysis, but understand that there's gas in the tank. There's proof that there's gas in the tank, and that active traders are coming to the party, and that there's going to be an exchange of liquidity. So that's what it means. So don't want to confuse you guys. Don't just jump in short. Look for an entry. This one's over. Still monitor this pair if you want to. Find another safe entry according to the methodology. Okay, let me see if I can find one more. Okay, good question here. And they said it's a dumb question, but it's actually a good question. Where can you find the weekly report? Right now, we're going to be emailing the report on a weekly basis, so you'll have to access it through the email. We got to work on the integration on our end. So we probably will have just a place that you'll be able to go to access the report, and it'll probably be in the online course. Where you guys can just go and get straight to it. But that's not done yet. So if you guys want to take it at least at this week's, you will have to go and go through the email sequence that we sent out. So, and if you have any trouble with that, email us at support@TradeATS. We'll make sure that you guys get access to it. So, okay, let me see if I get one more question. Hang on. Okay, another question. Is there an ATS indicator that shows the red, green, and blue price chart, like I think you're referring to the one that's on the master pattern video? A lot of people that all we did was we color coded those candles. There's not a specific indicator that shows the exact price phase. I do have a project that I'm working on, something that we may have in the future that will do something similar to that. But that was for illustration purposes only, just to show you guys this is how we classify, and we use the boxes, we use the expansion levels to find the behavior that is performing in the three phases like that. So no, the answer to the question is no. There's not we don't have an indicator that just shows the color change like that and classifies the three phases. It would be awesome if we had something perfectly like that, but it's going to take a little more work on our parts to classify the market, according to the boxes and the expansion levels. So I just want to clear that up. Okay, let me find one more. Okay, news on the expansion index. I knew that question was coming. It's still in the works, guys. The biggest thing and I mentioned on the last webinar is getting, we ran into some security issues, and we're still getting those sorted out. And it's not just about the security. It's actually, here's the thing. We got a bunch of stuff to release. I have right now, this one is not quite done, but we have a whole new version 3.0 of ATS indicator coming out that's going to have regular candles. It's going to have a hybrid candle. It has a lot of cool stuff. So we got all these things that are ready, or that we're going to release, but we don't want to release it on the old security stuff with the license keys. So it's kind of one of those things, like we could just put it out there, or we can put it out there with the new security features, which will also, our goal is to get rid of the license keys. So that's the biggest thing right now, is we're still working with the coding team. I'm actually waiting for some responses today from one of my coders on my team, that with some answers to some of the things that we're trying to solve. And we're just trying to work through it as much as possible. But what we want to make sure is that our new stuff, there's not people trying to pirate it, so we protect the stuff for you guys that are honest people. And we want to make sure that it's stays in house, and we don't want to put the stuff out there without all the new features on it. So it's the indicator wise, everything, the expansion index pretty much done, but the everything as a whole, we kind of want to just do it all at once. So anyway, we will definitely have some more information on that here pretty soon. Let me see. And there was one more question here I think I wanted to address. Hang on. So, and if you guys don't know what the expansion index is, we did a webinar on it. If you look through the webinar archive, and I would tell you guys, especially if you're a new subscriber, as you get time, go through the webinars, because the webinars are going to address pretty much all the questions that you guys are going to have. And you'll notice that we say the same things almost every week. It's actually pretty, when it comes to trading approach, it's pretty simple. So if you guys invest some time and watch a handful of the webinars, they're usually about an hour, maybe a little over an hour a piece. And I think that it'll clear up a lot of stuff for you guys that are new. So, all right, guys, I think that's about it. We're going to go ahead, and like I said, if you guys have any questions, feel free to send it over to support@tradeats.com. Check out the volatility report. Let us know. We're always love to have some feedback on it from you guys. It's going to be an evolving process. That's just our first rendition. Next week's we'll probably have a video that goes along with it, with more narration. So we're gonna be expanding on that, because we think it's gonna be really helpful. And as you guys know, we're as a company, as a software company, our goal is to put value forth first. We don't want to make you guys, we're not trying to hold you hostage to our software, and do, oh, you can only do great if you have it. We're not like that. We want people on this that makes sense to them. If you're going to spend the $150 a month, we want you guys to feel like you're making progress and find value in the tool. If you're not, and you unsubscribe, doesn't hurt our feelings at all. We want you guys to find value and be in it for the long term. And that's why we want to give out things like the volatility report, even to people, for free. We want to give them value. We know that if we give enough value and put out good tools and solid methodology, that people are naturally going to want to stay subscribers, which is obviously our end goal, is to build a good amount of loyal, consistent subscribers that want to use ATS for years and years and years. That's our goal. I know it's not going to work for everybody, but we are getting quite a following of people that are never going to go anywhere else, and that tells us what we're doing is that it makes sense. So anyway, that's what that's for. Utilize it, but we definitely would love your feedback, because if you guys have suggestions, we can make sure that that we take those into consideration when we do do different versions in the future. And we want it's at the end of the day, it's for you guys, so we want to make sure it's the best it could be. So anyway, I want to leave you guys with that. Thank you guys so much for being on the webinar. I appreciate your support, and we will go ahead and see you guys next week. So everyone have a great rest of the week and happy trading. All right. Talk to you guys later. Bye-bye.